Welcome to the People, Property, Place podcast with me, your host, Matthew Watts, founder and managing director of Rockbourne. This is a podcast where I share the stories, views, opinions and career journeys of the movers, shakers, innovators and leaders in the real estate industry. Welcome to the People, Property, Place podcast. Today we're joined by Bianca Tristao, co-founder and managing partner of Coleford Capital. Coleford are an owner-managed UK and European real estate investment and asset management business, which was launched in 2022 with her co-founder, former head of investment management at Avignon Capital, Phil Walker. Welcome to the podcast.
Thanks for having me.
Not at all. Well, thanks so much for coming in to the office and to the podcast studio. So a place I always like to start these conversations is how you got into property. And I think especially given the fact you did languages, I think French and Italian at Bristol Uni. How did you choose that course before we get onto the secondary property question?
Yeah, sure. I suppose I had a bit of an unusual start in my career. I had absolutely no idea I wanted to do property or real estate at school. So from my perspective, I just followed my skill set and my interests. And I grew up bilingual, Portuguese and English. So I had a sort of naturally gravitated towards other languages and other cultures. So just sort of followed that towards university, but no idea what it would lead to at all. And then I suppose I got to about third year, saw my friends graduating and getting jobs and thinking, oh God, I really need to decide what I need to do here or what I want to do here. But I knew I was sort of financially minded. So I did consider a career in more traditional finance sectors and members of my family had gone down that route. So it didn't feel completely foreign to me, but I just felt a slight disconnect with elements of the financial sector and other asset classes. So I was like, how can I make a link between something a bit more tangible, but also use my skill set in finance or basic skill set at that time? So yeah, I sort of connected the dots between real estate and other asset classes, sort of walking through Paris on my year abroad actually, and thinking, oh, actually buildings, yeah, that could be quite interesting. So just went from there.
So you didn't have anyone in the family who was in real estate?
No, not at all. Not at all. I mean, the background for my family was quite entrepreneurial. So it's always been family run business for sort of 4 generations, which started in coffee trading. So really no link whatsoever to real estate. And I think I wanted to pave my own way, to be honest. So I quite liked that no one was in it. I mean, it sets a slight challenge when you're entering it because it is a people industry. Network has a huge part to play. But ultimately, you get on the phone with a few peers and friends, and before you know it, you've been put in touch with some interesting people and you get your work experience, and then it just snowballs from there.
So how, not having any sort of prior context, how did you choose your masters at CAS? How did you go about? Did you just work out that you needed to get a master's in it, or did you want to kind of test real estate before you kind of committed a career?
Actually, it's probably more the former, although the latter seems like quite a sensible approach, but I'd say it's more the former. So before I graduated my undergrad at Bristol, so I did a couple of work experiences and very casual, sort of informal through friends of friends, and realised that actually it was an industry I liked and wanted to explore further. And some advice I got at the time, and given my sort of very basic to no understanding of what real estate really entailed, was to go through the graduate scheme process. And through there, I could sort of tap into various disciplines and find a route that I gravitated towards. So to do that, I had to do an RICS accredited course. To be honest, the master's for me was a little bit of an ends to a means. I would have liked to have done a master's later on in life. But To be honest, it was the perfect route for where I ended up going. And I have no regrets towards that. And CAS was a relatively easy choice for me. I wanted to be in London. I was a Londoner. My friends were here. They'd graduated. They were working. So I wanted to be near that hustle and bustle. I also quite like the sort of international factor. I guess by nature of my international background and speaking different languages, I like that London attract not just your traditional sort of real estate professional style English British professionals. So yeah, CAS felt like a good choice. And then halfway through that, just went through that process of applying for tens of different grad schemes in the larger corporates.
Yeah. And so you did the milk rounds and landed at Knight Frank.
I did, yes, landed at Knight Frank. So got a couple of offers. Knight Frank was definitely my preferred at the time. Again, I didn't really know what I was getting myself into. I'd obviously picked up the basics on what valuation and asset management meant, but I didn't really know what any of it meant in practice. So I sort of showed up at Knight Frank and all these grads around me saying, oh, I'm going to be a property developer or I'm going to work in hotels. And I had absolutely no idea. So for me, the graduate scheme and sort of rotating it across different departments was ideal.
And so you, having kind of looked at your background on LinkedIn, it's city leasing, European cap markets, and then hotel and leisure vals.
Exactly. Yeah. So the start in city leasing was fantastic because it's such a good launching pad for building a network early on. And very importantly is you're forced to see buildings, which I know sounds like quite a stupid thing to say, but one piece of advice I would definitely give at anyone's early stage of their career is go inspect buildings. I think we sometimes forget, especially in this day and age, and we just sit behind emails or cash flows, but you need to go see the physical context and see it in front of you. So as a result, I was able to visit and inspect quite a lot of buildings in that first rotation, in that first year. And it was quite nice, as being quite a small insular market meant that I got to know it quite well, felt very comfortable in my time there. And from there ended up in, as you say, European capital markets, getting closer to APC period.
Did you choose that or did you get put into it because of your linguistic ability?
Well, I didn't choose it, but I also we didn't really talk about the languages element of it. It might have been a factor, but to be honest, my predecessors didn't necessarily speak other languages. Yeah. So it's not essential, but I'm sure it does help at the time. Like, for example, I remember doing some inspections in Italy and France and what have you. So, to some, in some respects, it does help a little bit. And then, you have to do your valuations rotation, and now I got put into hotels, which ended up being a pleasant surprise, I have to say. For a year and a half, I didn't see myself being in the hotel sector or qualifying into valuations. But as soon as I got there and sort of seeing the different layers to valuing a trading asset and understanding the operations, I found it completely fascinating. So I've always been interested in how businesses operate. It's not a traditional investment valuation where it's sort of rent and capitalize that. You're actually looking at the operations P&L. So I really enjoyed it, and there was a lot to learn in my time there.
And so you qualified, and then did you choose to stay within valuation?
I did. And to be honest, when I left, I wasn't actively looking to move. I knew I wouldn't be there for the entirety of my career, put it that way. I knew there was an element of a glass ceiling for me personally. When that move was going to happen, I wasn't sure, but an opportunity arose that I couldn't turn my back on. So I moved quite early on, sort of a year into qualifying.
And did you, at this stage, obviously you built up your understanding of real estate and how it worked, and you worked across quite a few different markets, and you probably had a broader network. Did you take any advice around that move, or were you able to, did you have the clarity in terms of the future to be able to see the type of role you wanted and then reverse engineer it and think that this next move was the right one? Yeah,
that's a really good question, actually. I think what happened is I just became open to a move, right? So like I said, I wasn't actively looking, but I think there are sort of subconscious cues that go on in your head. For example, let me just tidy up my LinkedIn, that sort of thing. Let me actually check my LinkedIn messages and see what's going on in the activity there. And a couple of weeks or months into this happening, I received a message from my former employer, Amnion Capital, who was doing their hiring process at the time via LinkedIn. And it was slightly serendipitous, to be honest, because they had just started buying hotels. So I suppose they went into LinkedIn and thought, right, someone with a real estate background but understands hotels. And then I come up, I had the investment aspect, I had the hotel valuation aspect, graduate scheme, qualified, all of this. So we obviously connected in that way. And I did a bit of research. I honestly didn't know much about them at the time. And I just thought, well, this sounds brilliant. I mean, the way they had pitched it to me is that I'd be tackling different sectors, different geographies, and a whole new range of disciplines that I hadn't even tested yet. So I just thought it was the perfect opportunity. Obviously, it's hard to seek out advice internally because you have to be quite quiet amongst your team members. I was quite fortunate actually, because my now husband, who's also at Knight Frank and still is, he he was a very good sounding board for whether I should take this opportunity, because actually turning my back on my team at Knight Frank wasn't an easy decision. Like I said, I knew it wasn't long term, but I didn't take it lightly at all.
Yeah, it's a very emotional. I think people underestimate like changing jobs is like a very emotional process, and yeah, you've got to kind of get through all of that. So you moved to Avignon in 2017, and did you have a kind of a clear remit or clear role when you started, like to work on a particular fund or portfolio? Like you mentioned the hotels, but were you just going to do hotels, or was it?
No, it was a little bit more broad than that. I mean, my job description was coming in as an investment analyst. So I knew I would be sort of heavily on the transactional side. But having not had experience in that space before, they thought it would be interesting to give me a few assets to asset manage. Not the incredibly intensive ones, because my focus would be investment, but sort of the more single let stuff and hotels. They'd started amalgamating a portfolio of hotels in the Netherlands. So I did some sort of very basic asset management on that sort of stuff, liaising with the tenant and reporting and that sort of stuff. But ultimately my role was very much from the sourcing piece all the way through to actually transacting and completing the deal. But it wasn't sector or geography specific. So it was just whatever we were looking at and opportunities we were looking at the time. So my first deal was in retail, UK, for example. But yeah, we did transact in hotels, offices, retail, supermarkets, quite a wide range.
You mentioned you had a kind of a natural analytical ability, and no doubt in the European capital markets team that ability grew, and then in the valuation space. Moving to the principal side as an analyst, was there a modelling test, and how did you approach that? Did you kind of upskill yourself outside of work, or had you done a lot of training on the job at that stage to be able to pass that test?
So that's a good question, and probably answers why I ended up at Avignon and why I was able to excel there. There was a modelling test, but it was relatively basic in that they weren't looking for anyone it wasn't that sort of PE style where, you have 2 hours to build a model from scratch. They had a model, and they were looking for me to sort of plug inputs into that model. But it was more a way of testing how my brain worked in terms of evaluating or underwriting a deal. So more about the assumptions that I put into it. What I did do, which I think definitely helped, is I added a layer to the model at the time, which I ended up doing wrong because it was just a very basic sort of unlevered cash flow. And one of the questions was, could you place some senior debt into this acquisition? I said, of course you can. In fact, I've modeled it out. And I forgot to pay back the loan at the end of it. But they obviously liked my attempt at trying that and just saw how my brain worked a little bit. So I didn't need incredibly advanced skills, but I did have a basic understanding about how Excel worked, how you could, build a model basically. And now, we don't start every model from scratch. I mean, we have a base model that we work with. But I think it's incredibly important to be able to look at one and see when something's gone wrong, or, how, is your rent review coming in properly and that sort of thing.
So you started as an investment analyst, and then you got promoted a year or so later to investment manager. How did your role change?
Well, the most obvious element, I guess, is that sort of concept of managerial role. I mean, I wasn't necessarily managing anyone, but all of a sudden you have analysts underneath you, which was quite an interesting change for me, because I would say, and I still have this a little bit, and it's something that I'm constantly thinking about, but sort of I like to take ownership in the work that I do, which doesn't always lend itself well for teaching and sort of building on teams. But I actually really enjoyed the element of working with an analyst. It feels quite sort of empowering being able to pass on your knowledge and teach. So that was the most obvious change. But my day-to-day didn't really change much. I mean, naturally, a few more responsibilities come about, conversations with clients and investor meetings and that sort of thing. But to be honest, I was quite fortunate where they were sort of forcing us to do that day one anyway. So it was just taking what I was already doing as an analyst and just elevating it to another level. And
were you more market facing as well in terms of originating deals? Was there more onus on, deal origination rather than just the underwriting of them?
Yeah, absolutely. Absolutely. I mean, you're definitely forced to go out more. But again, we were encouraged to do that from analyst level. Like I said, it wasn't sort of a traditional investment management firm where it feels hierarchical and you have your very sort of restricted roles. I mean, from analyst through to manager through to senior management, it was all collectively sourcing deals. Underwriting naturally falls to the analysts or the managers, speaking to the banks, to the investors, to the clients. But it ramps up with time. And obviously, as I said, I was fresh to it, having come from Val's background. So I definitely had to develop the skill set to feel more confident to take it further.
So Avignon as a business, how would you describe them? Investment management platform and operating partner? Who are their clients and where does their capital come from and how's it structured?
Yeah, exactly that. It is a sort of investment and asset management business that, I'll talk within the framework that I know. Obviously, I haven't been there for a year, but the founding partners effectively were helping private wealth get their money out of predominantly South Africa, to be honest, into the UK. So, and with that, they formed a sort of portfolio of clubbing investors together, investing in sort of smaller retail assets in the UK. That grew and grew and grew, and it became a separate account business, ranging from family offices to high net worths to medium-sized institutions. When I left, there were further discussions with other different groups, entering sort of private equity and larger institutions and that sort of thing. But yeah, it wasn't a fund per se, but rather sort of separate account mandates and building up a portfolio on a deal by deal basis or thematic trends, for example.
Yeah, fine, makes sense. And so you must have worked very closely with your now business partner, Phil. Was he a mentor to you, or what was that relationship like at Avignon?
Yeah, he was. I mean, he was my line manager and he hired me in the early days. So worked very closely with him for sort of 5-6 years. And yeah, he definitely showed me the ropes quite early on and understanding, the cash flow element, the debt piece, which is all relatively new to me. So yeah, I'd say we work very closely on a daily basis.
So how, you were at Avignon just shy of 5 years and you left in December 2021. How did you leave, and then how did Coleford Capital, your now business, come about?
So I left roughly this time last year, and actually, to be honest, I think sort of taking it back prior to Coleford, I was, I suppose, a bit of a COVID cliche where, for that 2-year period of pandemic and lockdown, a lot of self-reflection and just thinking, what's the next step, to be honest. I was finding that my motivation was dwindling, and it was, nothing against my former employer. It was a great place to work and I could have stayed there for a long, long time. I was incredibly comfortable and they treated me very well. But I just, without sort of realizing it, in my subconscious, I just felt like the motivation was dwindling. I felt like I was stagnating a little bit. And I think I felt like I needed a change. So, whether it was starting up a new business or I even explored other opportunities or considered, interviewing elsewhere. And I just came to the realization at some point that I had to sort of leave and break the tie to figure out what that next step was going to be. And again, I was quite lucky, maybe a bit of serendipity, but a few colleagues of mine were probably going through a similar thing. And we sort of left roughly around the same time, including Phil. And that's when we sort of got together and started considering what our next move could be. And a few months later, the idea of Coleford came about and we thought, why not? This is the time is now. It's a great opportunity. And for me, it was always about the opportunity cost being relatively low, which it did feel like it was at the time. So I had nothing to lose.
And so you'd left, you've kind of gone on this journey of working out what it is you wanted to do. Did you call Phil up and say, look, I've got an idea, how about it? Or did he call you up and say, look, I know you're left and you're on this journey exploring what it is that you want to do. Why don't we have a further chat? How did that come about?
I think Phil was probably a bit more of the driver, but I mean, we were speaking quite closely anyway about ideas. I mean, I even considered at one point, another avenue with sort of a family office that I share with my brothers, and Phil wanted to take some time off. But so we were just chatting about what the future looked like. But yeah, I think Phil was definitely a big driving force that that got us to where we are now.
And so I'm always interested in how businesses are named. How did you come up with the name Coleford Capital? Where did that come from?
Yeah, so I think this maybe even answers the previous question, but Coleford Road is the road that Phil lives on. So I guess that's probably quite telling as to the driving force, so to speak. But I wish it was a slightly more exciting story. Although, you know, where Phil lives is incredibly exciting, I'm sure. But yeah, and I mean, he tells it slightly better than me, but you know, he was put under quite a bit of pressure to come up with a branding idea. And they said, just, you know, come up with a name. So he went with Coleford. And then actually, when we sat down and thought about it, we just thought, actually, it works pretty well.
Yeah, I think it's got a great ring to it. So as you kind of went through this journey of setting the business up, you know, branding it, creating a strategy and identity, because you've got 3 strategies that you run at the moment. Can you just give a bit of an overview of the business as it is and then some of the strategies that you run?
Yeah, sure. I mean, our model is not too dissimilar to what I was talking about before. I mean, we're a separate account mandate where we deal on a deal by deal basis for private wealth. I mean, whether that's dressed up as a family office or small to medium-sized institutions that is investing or advising private wealth, or even just, you know, WhatsApping high net worths. So we operate on a deal-by-deal basis, but we like to have conviction in sort of what the vision and strategy looks like. Otherwise, it's hard to get people to sort of buy into who we are and what we do. So with that, we have sort of 3 overarching strategies, but bearing in mind what our current business model is in the short term, there needs to be an element of flexibility and, you know, now being a perfect example to sort of capitalize on shockwaves through the market. But I mean, in sort of a very, very high level, we've got business space. I mean, we're still big believers in business space that will probably look more like offices and sheds. But the key for us is to focus on sort of mission critical spaces where they're fundamentally important for the tenant's core business. There's a really strong reason as to why they're there. And then we've got sort of the infrastructure piece that we call it. I want to be like slightly clear about the infrastructure piece because that can be maybe a bit misleading. But the way we saw it is we want to sort of tackle strategies that are sort of directly linked to how we function and live as a society. I mean, to give you a couple of examples, you know, data centers, waste management, renewable energy, that sort of stuff. There's always, you know, you can still benefit from quite long leases at a discount to traditional sectors because institutions haven't necessarily been heavily involved in these particular sectors. So we definitely see an opportunity there, not to mention quite attracted by the sort of longevity piece that's directly linked to it. And then the other one is alternatives. Again, we're seeing institutions spending more time and money and resource investigating different alternatives, you know, whether it's healthcare or hotels or education. So we think that those are sectors that are worth our time too.
Awesome. So tell me about your first deal, because I think that's always a kind of a landmark moment when you set up a business, you come up with a strategy, it's all great until you actually do your first deal and you're away.
Yeah, absolutely. I mean, we got quite lucky. Well, maybe lucky is not the right word. I mean, someone else might call it something different, but we were actually able to do a deal sort of straight away. I should probably caveat that it wasn't under the Coleford umbrella necessarily, but as we were leaving Avignon, got a deal under offer. And when we called up the investor to let them know, they said, look, I appreciate the circumstances and what contracts say, but, you know, we'd like to have you involved in some way or another because you understand the history behind the deal and you know us. So we came to a really, you know, elegant, tidy solution with Avignon where we effectively consulted to them. So like I said, it wasn't quite a Coleford deal per se, but it was quite a nice ego boost, sort of leaving your previous employment, not knowing what you're about to do, and then have investors say, actually, would quite like your help. So we transacted on a regional office around about May time for one of our private investors.
And that's a bit of a catalyst probably in terms of furthering the discussions. So what was your first deal under Coleford
Well, in terms of actual transacting, we haven't completed on one. We are under offer on an asset, but also other areas that we're trying to explore growth is not purely from transacting, but just growing our AUM. So we were able to bring some assets under our management, sort of a couple of months into sort of the launch of Coleford, and then fingers crossed, if all goes well, we'll be able to transact in the new year.
Amazing. So yeah, talk to me about your kind of assets under management and where do they fit in terms of the three strategies?
Yeah, sure. So those assets, it's a portfolio, or it's two supermarkets that we had bought for a client back in 2020, and we bought them really well, to be honest. It was a distressed seller at the time, so the yield was very attractive for what we were dealing with, and we were able to sort of tap into these assets because one just sort of slipped below the requirement of the institutions. The WALT was 9 years instead of 10 years, but the blended across the two was comfortably in the double digits. So we brought these two under our management. I mean, this one kind of straddles, I would say, probably two of our strategies. I would go as far as saying business space, because, you know, you have quite an important mission critical tenant within the real estate, but also in terms of the infrastructure piece, because it's just how we operate and function as a society, and necessity that, you know, we'll need as long as we live, I imagine.
So you've also hired a former Avignon employee, Alessandro, to kind of join as a senior asset manager. And I think also in the React News kind of article that went out when you launched the business, you've got plans to kind of hire a couple of other people. Can you just talk to me about your growth plans from a people perspective and an asset management perspective as well?
So in the short term, I think we're very conscious about sort of not overstretching ourselves and growing quite organically. The sort of Alessandro joining is a little bit more strategic. I mean, he has other ventures that he continues to explore, but he was a former colleague at Avignon and one of the senior asset managers there. And he actually left quite a bit before us, but ultimately became self-employed and still wanted to keep a foot in the door in real estate. So it was just good timing to bring him into the fold. And then we've got two more joining hopefully next year. We're just in the process of exploring that. One is more along the lines of investor relations, and the other is actually we're looking at a specialist. And that kind of sort of leads on quite nicely into how we see our sort of growth plans, which is sort of developing certain specialisms. Because, you know, a challenge for us is always going to be what's our value add to an investor? And I think if we can just sort of develop our skill sets within certain specialisms, then, you know, that's quite an easy tick in terms of what your value add is.
Makes complete sense. How do you and Phil split your roles and responsibilities at the moment? Because there's quite a lot going on, right?
Yeah.
How do you split that up?
Yeah, it's something that we've actually talked about quite a lot recently. I think at the moment we are so much in our infancy, sort of months into this venture. It's a little bit of everyone getting involved and doing a bit of everything, which seems to be working hard, and it means that we both have a very good understanding of all elements of the business. And I'm not just talking about the sort of core business or the vision and strategy, but also, you know, the operational side of it, the accounting, structuring, and what have you, the marketing. So at the moment, we're trying to be quite efficient with our time. You know, if our to-do list has 4 items on it, you know, we sort of divvy it up and play to each other's strengths. But I think if we're at the point where there's just so much going on, we'll definitely have to be a bit more sort of considered with how we split our time. And actually, I'm even finding that in the past months that there are areas where one of us will naturally gravitate towards a certain area, which is quite fortunate. I
guess, for probably people listening, this is recorded middle of November, so with a view to kind of launch in January. But how long's the business been going?
A few months, to be honest, about 6 months or so.
6 months.
Yeah.
Early on. Do you have a mentor, or do you have a board, or do you have advisors? Because I appreciate, if you go back to the start of our conversation, you didn't really know much about real estate or where to start other than your trip, your year abroad in Paris. You've built up a network now. Do you have mentors or people you lean on to help navigate the early parts of setting up a business?
Absolutely. I mean, I will take advice from absolutely anyone that's willing to give it. But absolutely, I mean, we try to speak to the seasoned pros all the time. I think when you're setting up a business, ego just has to go out the window, and you have to take advice from anyone that will give it to you. Fortunately, you know, across our careers, we have sort of previous bosses or colleagues and what have you, and sort of different stakeholders along the way that are more than happy to give advice. And more specifically, we are looking into the idea of sort of a non-exec board. That's actually some advice I got quite early on, is try and build a non-exec board. I mean, you know, again, it's having that sort of unbiased sounding board of sort of experienced and seasoned professionals that I think you need. I think when you're dealing with sort of founding partners, you can sometimes sort of talk yourself and convince yourself of a situation when you're together, but actually having someone else who has the business's growth and best interest in mind, but also once removed, I think is really important. So we'll definitely be looking to bring a non-exec board on.
And no doubt their connections to capital and everybody else that comes through will come to the frame. We're obviously in a relatively turbulent or choppy market, and that creates opportunity. How do you view the market today at 17th of November 2022?
Yeah, it's a really interesting one. I mean, first sort of tackling the challenging element is just how much it's fluctuating. I think, for example, you know, I've always worked with investors that are debt backed. So, you know, and that's been all over the place. So yeah, how you price assets right now, especially if you're considering debt. I mean, swap rates are just fluctuating so much on a daily basis, something that we haven't experienced for over a decade, really. So it's definitely been a slightly challenging market to navigate in. To be honest, that you can sort of mitigate a little bit. For me, the biggest risk is that sort of leads on to uncertainty. And for me, uncertainty is then stagnation. What you really need is people to be quite bold and decisive in moments like this and just willing to take the plunge. And people are. So it's just tapping into those different networks. But like you said, there's all that opportunity that's coming out. And in the very, very, very short term, we quickly turned our attention to, for example, regional offices, or even now we're seeing it within London offices, where we're seeing institutions having to offload some of these assets at a significant discount to long-term averages, because they're having to reweight their portfolio. I mean, stuff that we would have been looking at in net initials in the 6s or even 5s, high 5s, is now sort of trading 8s, 9s, 10s, starting to look incredibly compelling, especially when you're talking about sort of quality stock and quality locations, not having to compromise on the actual quality of the real estate itself.
How do you go about, as a separate account business, raising capital on a deal-by-deal basis? How do you go about beating cash-rich buyers with a discretionary mandate? Don't have to find the deal, find the capital, raise the debt, you know, all at the same time. How do you go about doing that? Yeah,
it's certainly one of our biggest challenges. I mean, I guess it's a couple of things, to be honest. I mean, if you word travels quite fast in the market, if you're relatively, there have been moments where we've been relatively honest with a vendor, you know, for example, the debt element, you know, we need to get it to credit or to do this deal. And sometimes they've been quite sort of forthcoming to give us the time that we need and the runway that we need. I mean, the capital piece, we've been quite lucky as we try not to pursue deals too heavily until we've got the capital backing. I think in sort of today's world, it's become a lot easier to get investors on board, either through, you know, WhatsApp or Teams calls and that sort of thing. Obviously, face to face, you can't beat that, but getting access to them and decision making has become a lot faster, which has helped us a little bit. So it's a big challenge that you know, we're having to constantly work at. But to be honest, I think being able to get access to our money a lot faster and sort of the decision making process speeding up means that, you know, we'll always look to get a deal under offer and pursue a deal when we already have the backing or the support of our investor base.
How do you go about, you mentioned it's easier to get hold of clients these days. How do you go about raising money? I know there's no shortage of capital looking for a good home for investment, but how do you do that? Is that just through your own networks?
Yeah, absolutely. It's through our own networks. I mean, we have a handful of investors that we talk to on a weekly basis. So you have a really good idea of what they're looking for and what their appetite is like. I mean, one thing's for sure, I would say with our network and our investor base, not all of them are sort of specifically targeting real estate. So you have to keep that quite fresh and recycle a lot of your investor base. So we're constantly looking for new sources of equity and capital. But yeah, I think if you have a good handle and understanding of what they want and just making sure that communication is incredibly regular, that just means that you can react a lot faster to what the market's saying or doing.
Awesome. So what has been your biggest challenge today? I know you might have touched on that already, but what would you say the biggest challenge has been?
I mean, from a Coleford perspective, because obviously we just talked about the market element, but from a Coleford perspective, I'd say it's definitely track record. Fortunately, like I said, we have a strong network of investors who have built up many years of trust. So they're ready to deploy with us. And the business model that we're operating on right now in terms of deal by deal is very much sort of our short term so that we can build that track record and grow on it. But there are definitely other sort of sophisticated equity partners that need a stronger track record. So that will definitely be a big challenge for us and trying to sort of grow that quite quickly in the short term.
So you'll try and do a couple of deals, prove your ability to execute and be flexible in terms of business plans, duration as well in terms of the hold or the period. Will you try and raise your own fund, do you think, in the future, or will you just be opportunity led and take a pulse if and when in the future?
Yeah, sure. Maybe in the future. I think definitely not in the short term. Maybe in the medium to long term, we'll start exploring those avenues. I think you have to have quite sort of a strong, robust team with very clear roles and responsibilities when you're dealing with the fund route. I mean, there's a lot of work that goes behind setting up a fund before you've even got to the real estate part of it. So I think in the short term, we'll stick with the model that we have now because it just allows us to be incredibly nimble and just react quite quickly to shocks in the market. But long term, we would be looking to create sort of, I'd say not necessarily fund, but more efficient structures, say a prop code that you can sort of pull assets into in a more efficient way.
Yeah. How, as a business, as a new business, getting alignment in deals with investors when young businesses don't have that much co-invest. How do you navigate that?
It is a bit of a tricky one, but to be honest, it's a relatively easy one to navigate because you actually find that a lot of equity partners are being quite flexible about how you deal with that. And I'm not saying that they're sort of eradicating co-investment altogether, but they're very understanding of the sort of startup nature of the operating partners that they're dealing with. So that, they offer solutions in terms of rolling up fees or even just sort of reducing the percentage amounts, but actually looking at like what that nominal value means in terms of hurt money. So, for example, 2% might mean a hell of a lot more for two individuals who are putting savings into a deal rather than 5% of a group with a huge balance sheet. Yeah. So it's just contextualizing what the hurt money really means and what that means in terms of alignment. Fortunately too, on the private side is not all private investors do actually require co-investment. So some of the deals we've done more recently, there was no requirement for co-investment. So we've got quite lucky in that respect. But yeah, long term, we'll definitely be looking at building up a balance sheet so that we can ensure that we are always aligned with our investor base.
Amazing. So 2023 is fast approaching. What's the plan for next year?
So the plan for next year, I mean, step one is growing our team and bringing new specialists on board. And then with that, I think we'll try to sort of roll out some more thematic strategies, try and get investors on board to grow portfolio and just capitalize on opportunities quite quickly rather than just sort of incredibly opportunity led in terms of what's coming out to market in the short term.
And is that across the UK and Europe, or are you going to kind of keep that quite focused?
I think in the first instance, we'll be focusing a little bit more on the UK. I mean, our track record does involve a lot of Europe. I mean, the start of my investment management career, actually, I was doing a lot more in the Netherlands. And then in the later part of my time at Avignon, sort of tackled Iberia and Portugal. So, and Phil's done a fair bit in Germany too. So I think we'll definitely go back to Europe, but in the short term, we're seeing quite a bit of opportunity in the UK. And not only, and we're also seeing efficiencies, which is sort of keeping us closer to home, not just from the real estate level, but beyond that from the corporate level, which is making UK looking marginally more attractive to us.
Okay, nice. And what advice would you give someone who's entering into the real estate space now?
I think, well, real estate it's quite a big market. So I mean, and taking my personal experience as an example, is you may think you know what you want to do, but there's actually quite a lot of different disciplines to get a handle of. So I would say, don't be put off by the fact that you don't know what you want to do. And employers, not even just in the large corporates, but from my experience, all employers are more than happy to place you in areas that you end up fitting quite well in. So I'd say try and sort of experience different disciplines, whether it's more on the transactional side or client-facing side, or even the technical side and the professional services side. And one thing's for sure is that, whatever insights you pick up and skill set or base knowledge that you pick up across any of those disciplines, it won't go to waste, because they're all interlinked at the end of the day. And network, I think, build up a network. It's hugely important, such a people business. So that will go very far over the whole duration of your career. And the last thing is, don't forget to inspect buildings. So early on in your career, ask your seniors to take you on site visits and meetings. If you're an analyst, don't get bogged down with cash flows too much. I mean, obviously that's a part of it, but you need to go
see the properties as well.
Properties, absolutely.
What's the best advice you've been given?
I'd say the best advice I'd be given, and I'll reflect on more recent advice in terms of Coleford. A really good piece of advice I was given was in terms of, find yourself a good founder. And for me, it was slightly easier because I was dealing with someone who happened to be in a similar situation as me, and we had 6 years of experience of working together. But if your intention is to start up a business and it's just sort of a seed you've planted in your own head, I think it's definitely worthwhile looking for a founding partner, just to use as a soundboard and just sort of challenge each other. So that was definitely good piece of advice. And also what we touched on earlier about developing a sort of non-exec board. So that's something that we'll definitely be looking at in the future. I'd also say is, be sort of have conviction with your vision and your strategy, be very intentional in the direction that you want to go, but review your business plan on a daily basis. Be prepared to absorb shocks in the market and macroeconomics that are just so out of your control. Don't be too disheartened and things, don't go your way. So you have to be a bit agile and flexible. Yeah.
How would Phil, your business partner, describe you?
The first word that pops to mind, to be honest, is diligent. He says that quite a lot to me. I think I have a very specific way of how I work, incredibly organized. And for me, it just all breaks back to efficiency, especially now, sort of launching a business and being self-employed. Your mind can go in all sorts of directions and take you away from your core business. So if you can create incredibly efficient processes, and just save things in an incredibly organized manner, it just makes your life so much easier in the long term. I mean, the number of times that we've been live on a project and then you have to sort of put it to bed a bit, it goes a bit dormant, and then you're picking up months later. If you have everything sort of diligently and organized in your folders, you can pick it up straight away. So yeah, he definitely uses diligent quite a lot. Also just my attention to detail with typos and cash flows. I think another one I would say is calm. I wouldn't say I'm particularly hot-headed. It could maybe come across as not enthused, but I just try to not get too attached to things, having learned that things can fall away quite quickly. So yeah, try and stay calm and collected throughout the process.
Nice. And what I appreciate you're going through a process of kind of building out your team, or will go through a process of building out your team. What traits do you look for in people that you work with, or partners that you work with as well?
People who are smarter than me, to be honest. I think everyone, but also especially me, I need to be challenged. I need to be tested. I don't need someone who will agree with everything I say. So definitely people who feel smarter than me and are willing to challenge me. I think also someone that's trusted. Like I said, especially when you're bringing people into the fold of your own business. I mean, you feel such an emotional attachment to the operations and all the work that goes out. So you want to make sure that everyone treats all of that with the same care and attention that you would. And then it just comes down to sort of personalities and making sure you gel. I mean, you don't have to be the same type of person at all by any means, but just be a relatively interesting person to want to spend time with and sort of develop a relationship outside of work.
Yeah. Cool. Well, look, as we draw to a close, the question I ask everyone is, if you were given £500 million worth of equity, who are the people, what property and which place would you look to deploy that cash?
I think so not treating it in the short term. I'm thinking more long term with this, being more considered with my 500 million. I'd say in terms of places, for me, it's all about population density. I think at the end of the day, we're herd animals and we want to be around people. So if there's decent population, sort of robust population density or the opportunity for growth in population, I think that's sort of a very key driver for me. I think in terms of property, again, it's going back to one of the strategies that I talked to, sort of looking at real estate that is so intrinsic with how we operate and function as a society. I just see such longevity in that sort of stuff. I mean, to give you an example, for example, I'd be quite keen to explore more in sort of data centers or elements of healthcare. And I'm not necessarily talking about sort of traditional care homes or what have you, but more sort of forward-thinking healthcare opportunities or clinics that are linked maybe to well-being or just sort of areas where I see our society needs to focus more attention on. And then people, like I said, people who are smarter than me and that can bring those elements of specialism into the fold.
Would you drop any names in there of people that you know of or work with?
Yeah, that's a good question. So the one I have in mind, I think we can't say his name yet, but yeah, I've definitely had sort of former colleagues and supervisors that I would definitely look to try and bring into the fold long term. I think I'd have a lot more to learn from them.
Awesome. Well, look, thank you so much for coming in today. I've really, really enjoyed it and really appreciate you coming in as well. So early on in terms of the business, but it's certainly a very exciting time, and I think you're going to have a lot of success. So excited to see what you and Phil go on to achieve.
Oh, thanks for having me.
Not at all. Cheers. Thanks.
Bye.
Thanks for listening to this episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague, subscribe, give us a rating, like or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of which guests you think we should get on the podcast or areas of the market that we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockbourne. The team recruit experienced talent for real estate private equity firms, investment managers, REITs, property companies and advisory firms across the investment, asset management, development, fund management, ESG, cap markets, investor relations and general practice space. So if you're considering your career options at the moment or looking to attract top talent to come and work for you, head over to the website www.rockbourne.com where you can find a wealth of resource to aid your search. Have a great day wherever you are, and I look forward to catching you next time.